learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming into April 23rd, 2020, and the stock market is still lagging behind earnings. And, well, it's important specifically with the S&P 500 and why the market made the moves today, but also in the broader sense. This has been the earnings move, and now it's lagging in the sense that despite all of the earnings that have been coming out, the market has been seeing, Netflix, we saw Snapchat and a few other companies, and then now what it's saying about the sympathy in other companies, it's keeping things up. However, all earnings guidance and estimates, a lot of companies have removed guidance or these estimates have been falling as we've been seeing, but you're not really seeing the market move. Now, this is telling us a few things, and today was an interesting day. The stock market went up, but the dollar also went up with it. Amongst other things, we're going to talk about that, but I'm going to make it very, very simple for you. I have everything for you. We got the keys for tomorrow. We got 3 trades to look at, or a few plays, one that I actually really like, and then we're going to go over the plays that we made today. So we're going to have time to focus on a different set of plays here too, because I didn't do as crazy as a play as yesterday. If you missed that SCO oil trade, I really, really recommend you check it out because that's probably one of the best trades. And we're still going to be watching that day by day to see how that plays out. But I have another complex, not as complex play, but it's still a pretty good risk reward. It's earnings. It's on Dominos. So I'm going to go over that play with you guys, and then I have the keys and everything else. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/thestockmarket. You could see the plays live. You could chat about it. You could ask about it. You could have fun. Maybe get surrounded by positivity. I don't know. A lot of things could happen. You might even come across a crazy arbitrage glitch or market. Anything could happen. But I hope I see you there. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes, anything, you need to post that below. Source that information. What are you playing with earnings? I'm going to go over a play I like with you today. So let me know what you think about it. But let us not waste any more time, okay? Before I get to the main point, I'm going to just tell you this. Option trading, learners again, those almost because on purpose only. Thank you for a wonderful day. Do not trade anything you see on this stream. I'm talking to myself, and I'm doing this to document everything in my journey. I like to have a diary. So please, please, please be responsible. I encourage long-term investing alongside option trading. And yeah, do whatever you want, but just don't do anything you see on this stream. Except learn. You could learn a lot if you're focused. Now, I know I'm being annoying. I'm sorry. I know it pisses you off, but that's why I'm remixing it again. You said I'm going to get 1 million followers for the plays. I want to see my 1 million followers. I got a little bit of traction on the feet picks yesterday too, so we might run with that too. We're going to see, but I have 3 different plays here, so I'm going to start with those, then we'll go over the keys. Quite simply, the first 3 plays I'm going to be looking at, Netflix Strangle. We made this play today, and I like the one I made, and I think it's a decent play maybe to double down on. However, it's going to depend on the volatility. So for me, I'm going to hold the play I made today and keep that there. However, if I didn't enter the trade or if I saw, big market moves come tomorrow or the next day, I'm going to go find one closer to the money. And now that trade is this one right here. It was Netflix. April 24th, they expire in 2 days. I got a 485 call for 75 cents, and then I got a 370 put for 78 cents. So that logged me out. But 150 to play it both ways. You can see here, but they're now at $20 a pop, and then the call is at $30 a pop. So you got clapped, and that's what I'm saying. They're really cheap, so a better play could be one. Again, it all depends on how Netflix is going to move. So now you see how I'm set up, because I might get this as an insurance play because that earnings play we made on Netflix yesterday, that's this one right here. We got what? 35%. We got 1,200 of the max 3,400 there. So we just need Netflix to kind of stay in that $70 range. But again, why I'm looking at this play is earnings season. Netflix just reported. All of these companies that report, there's usually an effect, the day of the report and then the day after and then usually the week after. It's a continuation. It takes time for things to digest, upgrades and downgrades, as analysts and people and funds and everybody wants the position. That will affect the stock following earnings and the digestion of this new information on the filings and really how they're performing. So that's why we're going after these plays right after earnings, and it's just simply because there's an opportunity for volatility. If you could get these contracts for cheap and the stocks move a lot more, especially in this environment, you could get in the money, spend a little bit amount, and walk away with a decent amount. That is the goal, so keep it small, and that's what it is. But that's the first play. The next play I like, we're already in this play. It's up 50%. I already saw this one move a little bit after hours. I didn't check the news on it, though. But Intel, it's going to probably have a morning run-up. Again, all of the companies here today and everything that we're seeing with earnings, there's been a very positive reaction to earnings and kind of the sentiment. So I wouldn't be surprised to see Intel do that, but I'm already in that play. So I'm going to consider a morning flip or kind of buy it in the morning and see if I could flip it out. But if I don't get Intel, the one I really like, this is one I really like, is Microsoft. Microsoft is going to be reporting down the road. Let's see how the market takes it, but they're still going to have their earnings. They're related to Intel chips, computers, you know what I'm saying? Gives you a little bit of idea, but that's going to be a sympathy play. So I'm probably going to just snag the Microsofts, then look for the Intel, but I really like that, and I'm just looking out for calls. Pretty much trying to get the calls now. I'm going to look for June contracts or later, and then I'm going to flip, or I'm going to get the puts about the day or the week before earnings. Because again, I think they're going to be reporting next week or a week after that. So there's that one, and then another play, Guild, is looking sus today. A lot of information came out at different times, but there's some call activity on it. However, it's just looking like that same, gold, the bio gold rush. So what I mean, it's going to take time. I only have May contracts, so May still has a decent amount of time, but not really. So those contracts are kind of cheap, so I want to see if I could get a position like NVS. I haven't got it yet. I'm going to be more patient because we still have all the other plays, but watch that. And then lastly, XLNX continuation. It had their earnings, they moved, but remember, we made a lot more money on XLNX afterwards off the continuation. So XLNX can really move afterwards. It's already at a weird spot, so we'll see if it does a back-to-back. Last earnings it did, but whichever move, again, the continuation, usually just follow the direction and see the post reaction from earnings that the market, analysts, and all that give. So those are your plays. Run it up, baby. God bless you. I love you all. So let's get into the keys now. As far as today, like I said, it's all earnings. The market has been simply moving here based off of earnings. That has been the number one main thing. Doesn't it feel weird saying the plays and getting into it? I'm explaining this, but it just feels weird if you're used to it. So this might be the last time because I don't like this and I'm very uncomfortable, but I hope you enjoyed it. Let me know. God bless you. But like we said, the market has been reacting to earnings, and that's kind of what's keeping it here. So I'd say more or less it is, but there's kind of this optimism and the fact that we are kind of confirming and denying certain aspects of what was priced in as these companies report, and then you're drawing the conclusion of, what does Snapchat report and what does this mean for advertisers? And then even the Snapchat call, they were talking about, yeah, we know all the ad spend is down. So it's all the industries like, okay, yeah, we know that it wasn't that bad. People are knowing what to expect. So it's confirming some of this stuff that we're seeing at these price levels and what just happened in the last 30, 45 days. But then also now it's going to have this opportunity to be like, well, that wasn't really true. We overestimated that. We underestimated that. So that's what we're going to be watching for. However, now I will say that leads to the next key. And I will say oil is still very, very important and where it's at. But watch for the Grim Reaper. If you really think about it, we saw the Grim Reaper on oil. The Grim Reaper, this is what happened in 2001. This is what I call it, but it's pretty much happened to Facebook. I think Facebook's a great example of the Grim Reaper, where at one time, and it's really relative to earnings, where earnings comes out and it just utterly shocks and surprises, and it just claps somebody. And that's what, when it was the middle of 2018, Netflix was at like 217, and then their earnings was just awful. They cut the guidance. It was really just worse than expected. It dropped $100, even went down to like 160 from 220. Even then, pretty much Facebook moved more than Bitcoin that year. It was crazy. It was like 40-50% stock on, something with the big market value. But that happened in 2001. There was like Intel and even some of the just bigger names as they were reporting back as stuff started to happen. Bad guidance cuts, bad earnings, and it was just really bad. And there was just really big surprises and shocks. And that's what I'm saying is that for the most part, not somebody's going to die is what I'm saying. By the looks of all of this, I would be shocked that, especially by the next quarter, next earnings, if we don't see a company get clapped by the Grim Reaper and just not everyone's going to make it, especially during these times. So we'll see. But if that occurs and, if everything's priced in, that's cool. But if that happens, the Grim Reaper could change the mood really, really quick. And, I don't know why I keep doing this. I did it again. I'm not even doing this on purpose. I swear to you. I'm this is awful. But I was showing you Facebook's chart right here. This was that 2018 drop, 217 to like 150. It was bad. Even if you pull it up here on a longer term chart, you can see it was pretty bad. And even the follow, it was ugly, man. It was ugly. So yeah, sorry about that. But finally, even then, like I said at the beginning of this video, the dollar went up today, even with the market's going up. So there's this earnings optimism. You're seeing what's happening with oil. Watch the dollar, watch the bonds. Those indicators that are more or less detached from earnings, those are going to give you kind of a clearer signal on what to expect following this. However, some earnings, good or bad, also can influence that. It's a weird feedback loop if you think about it. So be cautious, be smart, but now, let us get into the plays. So these are the plays we talked about. Let's talk about the plays that we're in and then a few of the plays we need to cover. So this is the Dominos play that we made. I made that strangle there. We got that. I forgot to cover this yesterday. Again, I spent a lot of time. That SEO play was wild. And again, if I could get that trade again, I'll do it, but you couldn't have done it today. Again, the premiums dropped so much. If you were going to buy that, do that same SEO trade, your cost basis on the covered call would be a lot higher. But this is the play we made here for Dominos. And now this is it's pretty much a jade lizard. It's like a ghetto jade lizard. I don't even know what a jade lizard is. It was just, people know what it is, but pretty much I remixed the strangle. So this is selling a short strangle at the money. So we've talked about this. This is literally the formula for pricing in earnings. You see the stock, the at the money price, and you see what they're charging before earnings at expiration date. Whatever they're charging for both contracts, the calls and puts, if people are saying, I want this much premium to agree to buy or sell at this price, the fact that they're not charging more or less, it's telling you what the market as well as the market maker believes that the stock is going to do in earnings. So that is essentially reflected through a strangle right here. So this is what you would do. The at the money price, it's saying the middle is about $35. So Dominos was pricing in $35 for their earnings. Now that could be give or take. And if you wanted to see this metric somewhere else, you could do it on Tastyworks or Thinkorswim. If you put in the ticker here on trade and pull up the option chain, you'll see this plus or minus 42.37. Then that number is the implied volatility, but you want that price there. It's telling you for the weekly, there's a plus or minus $42.37. That's what the market is pricing in through there. It even shows it right here, plus or minus. See, I don't know why. It says it here, plus or minus 42, but then right here it says plus or minus 38. We're at 35. So there's going to be some margin of error. So keep that in mind. But this is the play normally. And what you would do, you see, is unlimited risk because you're shorting these contracts. So you're collecting the premium. You get $3,500, and you're pretty much saying by the end of expiration, the contract isn't going to move in any direction more than $35 because, so let's say the stock only moves $5, but you got paid $3,500, you would keep the difference. But if the stock ends up moving, $50 per share, $50 up or down, one of those contracts will be $50 in the money. You only got $35, so you would have to pay the difference or whatever it goes to. It's unlimited risk. So what I did instead now, I grabbed a call on this end, and this is what made it the Jade Lizard. So this is the initial play that I did. I received $30 in credit. But why I did that is because I thought Dominos was going to go up. I pretty much said Dominos did great. They had a great last earnings, even though there's a lot of expectations. It was kind of like the Netflix trade. But now by buying this, where the stock went up $30 into the run, it was pricing in $30. It ran up before that, pretty much assuming that it had most of its move, even again off of their last earnings, they did good. So even if they did break through, I pretty much says Dominos is going to go up. I didn't know how much, but I assumed it was going to stay up. I didn't think Dominos would drop. That was my initial idea with earnings. So I said pretty much the market makers asking a lot of money. They're charging a lot. There's a lot of expectations and volatility. So I chose to sell that premium instead of buy it. But since I thought it could go up, I didn't want to be, I was like, it could go up a lot. It could go up a little bit. I just have this idea it's not going to go down, and I could still be wrong and I could still get clapped on that. So that in mind, I bought this call, and now you see it changes the whole thing. So my max reward is 30,000. No. It says 3010. It should be, it should be like, I think, see, it's like, even if I change it by like $3, you could see, but it should look like this. It's pretty much, it says if the price of Domino's winds up greater than $359, I make $3,000. That's it. So as long as Domino's goes up above $359, I make money. But now it says if Domino's is below $359, I lose $35,000. Do I really lose $35,000? No. This is assuming because I sold a put. So if it went down below $359, I agreed by selling a $390, I'm agreeing to buy 100 shares of Domino's at $390. So the max I could lose is if Domino's went to zero. Domino's isn't going bankrupt. And even as you see, even if the cruise lines got clapped, they're still trading at like $8 or $10, and you guys are all going to buy the dip. So it's not going to go to zero by April 24th. So it's not really a $35,000 risk. But the risk is if it drops. But even then now, at the end of the day, come Friday, if I did end up losing, I still collect I keep that $3,000 no matter what. If that contract expires in the money by a lot still, then I'll be forced to buy those Domino's shares. But I'm cool with holding them. And I would just hold those. It would cost me $18,000 on margin, $39,000 without margin. And I would just hold those shares till they went back up, maybe sell covered calls on them, maybe have to forcefully put them in the long term. But it's pretty much a win-win in that scenario. And now even the probability on this play, 71%. So even that play on Netflix yesterday, that was 40%. So some people thought they're like, this is a crazy big risk. It's a dumb play. Not really. Statistically, this play is in our favor. You're taking a bunch of premium up front to account for any moves. We got insurance, even in the worst case event, a good quality insurance. So if the stock goes up, I don't lose. If it goes down, we buy a stock. We buy stock that is even held up throughout all of this. I'm cool with it. So that is the play. We'll see tomorrow. Domino's is going to report. I will either, if Domino's goes up, we make $3,000. If not, we're clapped. Or just can't drop $50 or $30. So there was that, and then pretty much it. Everything else we're just holding. So I'm still going to hold that next Netflix play. I think that was the only play that I made. Yeah, and then I got that Netflix strangle. We'll see. But I'm going to be holding this Netflix play. I want to get the majority of it. It looks like we have a pretty decent probability of profit on there between everything, but essentially I still need Netflix to stay below 475 and above 404 by Friday. Snapchat did great. So remember, I did the flip before earnings. I forgot to go over this play, but that was up 500%. 200 and 800. I'm going to hold those because I have the shares, and we talked a lot about long-term on the stream today. And this is something too, if you guys haven't watched the long-term videos, check it out. But our total long-term account was only down 3% at the end of all of this. And then if you take the better diversified and balanced smaller account, we're up 3% on the year almost, or 2.78. But Snapchat did very good, but now I sold a covered call on my bigger position, so I'm down on that. But that's why I was like, well, Snapchat really did crazy. I might just keep those calls that we bought here, but I'm just going to hold that. These have a lot of time, believe it or not. So I'm going to either hold those, maybe ghetto spread that if they add more contracts, but I'm going to be a little bit more patient there with Snapchat. And then SCO, day 2, it worked. We made up another $680. You see, we lost $600 on the stock, but now those same contracts, they're at $1,400. Remember, we sold these yesterday for $4,300, and that was the whole way we made money on it. That's why if you bought the shares now, you could buy the shares for $600 cheaper than I did, but now if you wanted to sell the premium on that position, you're getting almost $3,000 less. So it's a completely different position now, but the play is working so far. So I even said if we could figure this out, I think give it like 30 days. I want to see how this play really ends up, even up till July. But if we could ever spot something like this, it's gold, and I love it. But there is that, and then finally, as far as everything else, I didn't get to go over this yesterday, but I have some now. I'm going to watch all these companies. Watch Boeing still. It's at an interesting spot. Again, I don't know when their earnings is, but you could just look at it. Something's here. I think we need to set up an earnings strangle, or it could be a continuation one, but I'm going to want to set up a strangle on Boeing. I want to get ready for that. Maybe I should have put that in the beginning, but if you made it this far, there you go, you win. But like I said, that Netflix play, we're in that play. We need, hopefully this thing kind of holds up. Hopefully it doesn't make too big of moves. But I like that XLNX continuation, Dominos, then watch L Brands. They had news today that they're unwinding the Victoria's Secret deal, so that had some effects. They got halted. There was some other news, but watch out for that because even like that Pinduoduo play, this thing might even just go crazy. You never know. So watch out for that. Then Snapchat, I still like it. We're still going to be holding it, riding the wave. We're going to see. This was just crazy, and I like it. We're just really just going to watch it. If it does start again, I think the level's like 17, $18. Those are pretty big highs, and I don't know if it'll get back 19 or 20 again, right? What was it? Yeah, it was at 19. I don't know. We'll see, but keep your eye on that. But now watch Facebook as a sympathy even to that, and we got that Facebook play, so I'm going to keep holding that. But Facebook definitely outpaced today, and it was leading the market all day. This is kind of, think about how people saw with Snapchat. We saw not only what happened with Snapchat, but now you saw how people responded to Snapchat. So that's where that sympathy play. And again, most of the plays now that we're in, we're holding. I got that Facebook play yesterday. I forgot to go. I see, look at you guys wanted the quick plays. You made me forget to go over ain't that funny? It's ironic like that. And I spent a lot of time explaining SEO, but that was the sympathy play, to balance out the puts. We got mad puts on there, so we wanted to balance that position. So now we're up on that. We're still down overall. We're down 17% on the total Facebook earnings position, as you see what we're built up around here. But I still like them, especially after that. Then Microsoft, I'm going to get this one in the morning, most likely. Again, I have to see the prices, but I think with the whole Intel thing and all that, that'll be good. But don't forget Intel, they're going to report. We'll cover their earnings tomorrow, but they moved after hours. I had a weird little pop up here, but again, with everything else, I think it's going to be good. Then I said this on stream, we haven't looked at McDonald's or HD. I want to start looking at them again. I think they're just because they're kind of at these spots, but look at McDonald's. If McDonald's kind of breaks out, it responded a little bit to Chipotle, but now think about Dominos. McDonald's might be one in the morning. I think we might be too late there already. Damn, a 5% move. That one should have been good, but we've neglected those. We got to look at those though. Watch even UNH. So remember, we held that contract 1,000%. We didn't take the profit. We're clapped on that. Unfortunately, we held it till the extra week. This is where holding till expiration hurts you, but we could see what happens. That's why we put $70 in at the end of the day. Hopefully you did not make investments based upon your unrealized profit, and that fueled different confidence to over leverage. But still watch UNH though. I think it's at an interesting level. We might just have to get one more week. We'll see. But here's UNH, and then INO. This thing went crazy. Remember, I bought those 200 shares at like $9. I'm still holding those. So building that whole little biotech things. Even Novartis, those went down today. They got clapped, but the contracts are still up surprisingly. So still like this, and even Guild. And like I said, Guild, I'm in the maze, but that position's kind of weak. So I want to see how we can rebuild that. And then finally, GLD. Like I said, watch UUP. UUP actually went up, and that was, again, 27.20 was weird on today. That's with just even the market being up there. So keep that in mind. But GLD, I haven't got into it. I don't know if it's going to make another breakout. This could be the moment of truth. We'll see with earnings, but the contract prices are pretty much at the same price when we sold out. So we're going to see what happens with that. But I still want that play, but I'm really not in any rush considering it how it moves, and I need to see a little bit more decay. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your helmet on. I need you in the game. I need you to try. If you were there at the end of the day, I'm glad you were, baby. But if you weren't, you need to try. You need to control the budget. Remember, I'm going to remind you again, don't make any additional deposits besides what you need to do. You need to be a robot. Long-term, short-term options, it doesn't matter. We set a plan monthly. You stick to that budget. That's it. You hit with that amount, good. Congratulations. You don't, okay, that's fine. Wait 30 days, you impatient ass. I need you focused. Earnings is more than 1 month. It's more than 1 week. There's a lot of opportunity, and even where we're at with the market, it's impossible to make the money if you broke. The mind's the obstacle, the strangest secret that you know. Okay, please don't get me too hyped, man. You already know what it is. So please, please, please focus, and you know what we talked about today. Your outlook, baby. Change the outlook. It will change the energy. You need energy to go somewhere. Change your outlook. You'll go somewhere, baby. So let's go. The coach loves you. I love you. I'm going to see you in the morning. Let's go.